In the next 30 seconds, I will show you why the majority of stock traders lose. And it has to do a mixture of FOMO, has to do with a mixture of charting, has to be a mixture of discipline. Let's talk about it. So when I take a look over on ACON, ACON is the number one top gainer as of now. Stock has gone from $6.80 and has ripped up towards $11. Now, a lot of traders that have not jumped in it yet, you start feeling FOMO, the fear of missing out. How did Deck already make $800? How did he pull the trigger? Oh, that person made money. That person makes money. The worst thing that you can do is pull the trigger anywhere above $10. But your FOMO is now going to make you. The next time you see the stock go up to 10.10 or 10.15 or 10.20, you're going to jump in. But every single time there has been an opportunity above $10, it has turned into the worst time to trade. Most new traders, most people that end up losing day in and day out, all they're doing is chasing stocks. New traders, beginners, rookies, people again who don't know what they're doing, always buy at the tippity top. Because you don't trust stocks. There's over 9,000 options for you to be able to trade. It's very tough for you to say, oh, there's 9,000 options. I want to jump in at the ones at the bottom and be able to make money. So instead, you wait for the big time spike. You buy in at the very top and you lose. Guess what? How many people buy in above $10 and they took a massive hit? And then bought in above $10 again and took a massive hit. And bought in above $10 again and took a massive hit. And another $10 and took a hit and took a hit and took a hit. So many people keep looking for the break, when in reality, what's the best area to enter? The best area to enter, if you guys want to be as smart and safe as possible, would be, let's say, down here. Wouldn't you guys say that every single time it comes down towards this region, this is going to be a much safer, smarter area to enter? Well, again, if we wanted to go all the way down towards the bottom here, we have tons of consolidation all the way down here. You're saying, Deck, where did you enter? Again, I entered at the bottom right here. I entered when I take a look over on ACON, I got filled at this play at 833. I wanted to get filled near a bottom. I don't want to get filled near the top. I got filled at 833 where there's a lot of consolidation, where there's a lot of support. So I could have a bounce on up, and then eventually it took on off. But I will tell you right now, if you constantly and consistently look to buy at breakouts of highs, that's where you're going to lose. The more consistent area that you can always be buying at is going to be lower for dip buys off top gainers rather than looking for high of the day breakouts. You would lose here, lose here, lose here, lose here, lose here. And on the contrary, you would, let's say, if you look for a dip buy, you would win here, win here, win here, win here, win here. Also, if you want to look off dip buys off the VWAP, you would win right here, right? So you have a much better opportunity. And looking at a top gainer, waiting for a pullback, getting a dip buy, moving back on up, rather than buying at the very tippity top, hoping that it goes up higher. It's great to play top gainers, but get top gainers when they're having retracements, when they're having pullbacks. Let's see what's going on with this play right now. Guess what? Exactly what I just talked about. Imagine if you just bought it at 1050 or 1060. Stock just again pulled on back down towards 980. Guess what's near 980? We're coming back down towards the VWAP. Dip buy opportunities, old spiking highs, old bounce plays, VWAP opportunities. There's a dip buy. All right, dip buy opportunities back on down towards old upper shadows, or again, old dip buy areas back on down towards 856. If you buy at 960, I like it. If you buy at 915, I like it, especially if you have what? Okay, Deck, this is my entry. And you know what? I am now going to put a stop loss underneath this area right here. I'm looking for a dip buy and I'm going to have a 20-cent stop loss. I love it. You're getting involved on a play and you're keeping yourself on very little risk. I like it. This is how you have more reward than risk. This is how you put yourself up for success, by getting filled at areas that are going to have better chances of moving on up, rather than people getting filled at areas that have better chances of moving on down. This is what successful stock trading looks like. When you can get filled off dips with quick stop losses, dip with quick stop loss, dip with quick stop loss. But most people don't have this. Most people have this. Deck, I just got filled. And guess what? Most likely you're going to be taking your profits when you get right up towards this line. So you get filled at the blue line, you take your profits when it gets up to the green line, and your stop loss is way down here. This means you can win 50 bucks and you're going to lose $1,000. How many people here usually end up winning? And when you win little, but when you lose maximum. Because mentally, this is how it's looking. Go back to, again, 10 seconds ago in this video. 10 seconds ago, guess what? I just showed you dip, tight stop loss, max win. You're doing right now the complete opposite. You're doing buy in at the top, take profits when you have them, and if it doesn't work out, you keep on holding until you hit max threshold, max pain, and then you get out way at the bottom. But even take a look at what's happening again. Again, same exact thing. Above $10 you lose, above $10 you lose, above $10 you lose, above $10 you lose. Guess what? Above $10 you lose. Stop being a person that's chasing based off emotion. Stop being a person that's chasing at the very tippity top. Stop being a person that's chasing over on these plays, hoping that again, you're going to be able to make money, right? You buy in at the top, you end up losing. That's the way it works. If you want to get filled on dip buys. Make sense, everyone?